Hey folks, Vic here with your weekly trade video, and I think you'll find this one pretty interesting. It's about the fractal nature of the Forex markets. Now, if you've never heard about this before, yeah, you'll want to have a listen to this. It's really a fascinating subject. In fact, fractal analysis applies to many other things found in nature, and it's what Darko uses every day in order to come up with the very profitable analysis and pending orders that he constantly provides for our members. So in this video, Darko's going to go over fractal analysis in great detail as it applies to the Forex market. So I hope you enjoy this video. It's a bit longer than most of our videos, but really well worth your time. And if you do like it, if you could hit the like button, we would greatly appreciate it as always. Okay, here's Darko.
Hi everyone, Darko here for a bonus video about the fractal of the market. Okay, so I don't know how long this video will be. The length of the video is not that important. It's the quality that I will be trying to communicate with you, and unless you understand this, you will be forever struggling. Okay, whatever I say in here is nothing new. We have been doing this for ages, and I won't be showing you live examples because that's what I will be referring to in the PMAs. So make sure that you understand what I'm trying to teach in here, and I will show you tons of live examples while I'm analyzing my charts on weekly basis. Okay, and like I said, this is one of the most important lessons that you could get, beside obviously everything else we do. So this is super important. Okay, so I have divided the screen in four boxes. Okay, let's just say that this is always your monthly chart. We just say this for the sake of this video, and this is always your weekly, your daily, and your 4-hour. Okay, it doesn't matter if in the real charts this is your yearly and monthly, weekly, and daily. The time frames are not that relevant, because whatever I show you on long term, you can do the exact same, apply this knowledge on short term. Okay, you can be micro scalping to position trading or investing. Okay, we all know that price usually 8 times out of 10, if not 9 times out of 10, moves in waves. It doesn't need to be this clear, but price makes almost always higher lows and higher highs, higher lows and higher highs, or lower highs and lower lows, or sometimes it's more like rangy, but we are still at the same, at some point we are going up, down, or we are going sideways, and you have to understand that. It doesn't matter if we are doing this, or we are going sideways. Okay, first and foremost, you need to understand on which time frame we are waving. Okay, like where are we in the bigger picture? Okay, because when price is in a continuation mode, okay, and then price is retracing on a monthly chart, okay, when that happens, when the monthly chart is correcting itself, this move in here almost always be something like this on your weekly. So the weekly is heading up, the trend is up, and then when this happens on a monthly chart, on a weekly chart, there are like two options. One of them is one of the most common, is that price will start doing this on a monthly chart. Okay, sorry, on a weekly chart, and then you say, oh geez, this high is higher than this high, we broke this leg, we are probably doing this. Okay, but what we are doing is the monthly chart is only correcting itself into some type of support for further upside, and now you take this short, okay, and price do this. It's, oh geez, this stuff doesn't work. Why did that happen? We had a rotation, that's the strongest signal, Darko said, and I took a full loss, and you have no idea why that happened. This is the reason why that happened. Unless you know where are we, what are we doing on a monthly chart, okay? Because we use the yearly chart for the bigger picture only, right? So, you know, unless you understand this, well, then you are just taking trades in the wrong side of the market and you are losing money and you have no idea why, okay? Sometimes the weekly chart is correcting itself into support. By the time we are in here, start correcting ourselves, the daily chart looks super nice, super, you know, upside and everything, and then all of a sudden this happens. And you say, oh, you know, we changed direction on a daily chart, you know, maybe a trend line break, or we are making, you know, we are breaking a swing low, and you say, oh geez, you know, let's tune into this shorting opportunity because now the market is down, the trend is confirmed, let's do this. And then this happens. Well, this leg in here is only a weekly retracement. Nothing has changed within the underlying trend. Okay? And the same for the daily. You know, when the daily is correcting itself, it's the same thing with the 4 hour. Okay? This happens, and now you say, okay, we went from uptrend to downtrend, let's short. And then this happens. Okay, so that's super important, because unless you understand what is the highest time frame that I'm watching for trends and support and resistance is doing, you will probably forever struggling, because you always pick the worst timing to enter a trade and you take a full loss and you have no idea why. The answer for that question and the remedy for that issue is watching your higher time frame. Okay? How many times have you heard me say, you know, let's just wait for the weekly retracement, because when the monthly chart starts showing signs of correction, there is a content on the website, the Price Action Reading School, you know, how to predict or how to identify, we don't predict anything, how to identify a potential correction. Could be an engulfing, bearish engulfing, could be any candlestick formation that I'm teaching you, and that is a potential correction. Okay, and then if the monthly charts start correcting, well, monthly charts usually not always start correcting into monthly levels. So if you start, you know, buying somewhere in here because you have a, you know, a daily pullback, well, as long as you're not, you know, you are reading the charts properly, you have to understand the bigger picture. Okay, and this takes time. These types of trades, when the monthly chart is retracing back into monthly support in alignment with the underlying trend, these trades don't grow on trees. Okay, so therefore, instead of waiting for like months to get a trade, therefore we try to go down to the weekly chart and see what the weekly chart is doing, and combining things, you know, 2 time frames below. If it's only a monthly level, then it's a daily chart. If it's only a weekly level, then it's a 4 hour charts. And there are times when you know, we go below those 2 time frames. Okay, it's very seldom, but I usually explain why we are doing this. Okay, give me 1 sec. Let me clear this in here, and this is always the monthly, weekly, daily, and 4 hour. Okay, and there are times like, you know what, Darko, the market doesn't trend that beautifully as you know. I totally get it. Let's just say that the market is rangy. Okay, we have something like this. Market is rangy. Okay, and this is your monthly chart, and you are marking these levels. Okay, these significant necklines, usually closest to price. It depends how strong that level is. Okay, so by the time price hits this level, and price is about to do this, because what you might think in here, oh, you know, price is rangy, it looks like a bit bearish, price might be doing this. And this is because you never know which one of these will happen. We don't have a crystal ball, nobody does. Okay, so when the market is ranging, and this is your higher time frame monthly, okay, when price gets in here, and obviously it depends if this is also a weekly chart. Let's just say for the sake of this example, it's both weekly and monthly. Okay, the weekly chart is a bit let's see here. So this line in here, we just pretend it's this one in here. We just pretend. Okay, so you never know if this is happening, going up or down. Now you have an identical neckline, monthly and weekly. It doesn't need to be perfectly identical, but it's in a ballpark. Okay, so when price hits this level on a daily chart, price could very well be trending, because this leg in here on a monthly, when price is heading up toward this level, same on a weekly, when we are heading up from this leg, the daily chart looks super strong, super strong. Like it looks like this is the strongest move ever. Okay, and now this level in here on a daily chart is this monthly and this weekly, and you don't know if this or this happens. Okay, now when you are heading into this level, you know, you have the super confident that this is heading up forever. Okay, because the trend is so strong. And then this happens on a daily chart. You say, oh, it's a breakout. It's a breakout. Okay, to the upside. And then this happens. Okay, so it's super important to know, okay, this is an uptrend. Every time you get a swing break rotation, you need to understand, where is this happening? Is it happening at a clean level of support and resistance, or is it happening in the middle of nowhere? If it's happening in the middle of nowhere, I don't care about it. But if it's happening around key levels of support and resistance, that's super important. Okay, so in this specific case, well, it's more likely price will be doing this than doing this. Okay, so the best way of trying to find high quality trades is, whatever trading style you have, let's just say you're day trading, you're scalping, you're swing trading, you're position trading. Okay, what you want to see is that your higher time frame, let's just take a short example for the sake of this, okay, instead of only taking longs. Okay, you need to understand, because sometimes, you know, you might hear me say the rubber band effect. When something is overstretched, the trend is down, everything looks bearish, blood red on, you know, yearly, monthly, weekly, everything, and all of a sudden we will get a monthly ACAT down in here. I say, you know what, price is heavily stretched, we are due for a pullback on a monthly chart. When that happens, usually the daily start shifting trend. We do see a swing break or a rotation. That's the one that I like to see, you know, a clear structure damage. There is an institutional thinking behind them, by, you know, the bulls are taking over the market, the bears are losing the battle. Okay, so therefore when price is overstretched, we might, you know, let's just say for the sake of this example, there is another level in here on a monthly chart. Price is stretched, but there is a clean level, and we get a shorting opportunity down in here. Therefore, even if you are trading with alignment with the trend, I would say hands-on. We had a couple of these trades this last month, because price is heavily overextended, extended. Okay, because price could go against you in a hurry, only to retrace back into resistance on a monthly chart. Then the weekly start trending up. So you might say, hey Darko, the weekly is your favorite time frame. Where your favorite time frame? The golden time frame. I usually refer to weekly chart with the golden timer when I was a day trader. The weekly is up. That trend is up. No, the trend is not up on the highest time frame. Okay, this monthly pullback in a bearish market, this is just a bear market rally. Well, that's how it looks like on your weekly chart. Okay, and then by the time we hit this level, then the weekly and daily start changing direction by giving you a structure break. Okay, these type of trades, if you learn how to read them, to trade them, and to capitalize on them, though these are the one that makes 10 to 1. Okay, maybe even more, 15 to 1. But by the time we are waiting for this, there is nothing wrong. Like if there is a very super strong monthly level, and we know, or at least our analysis tells us, that we are probably heading into a correction mode into this level, there is nothing wrong to involve yourself in a short-term longing opportunity on a daily and weekly until we hit that final level. Okay, and that's what we are doing, because we cannot wait for months for trades. So we are involving ourselves against the trend, with the trend. I'm being clear, hands off, hands on. Sometimes we are trading in alignment with the trend. I tell you hands on anyway, because of the rubber band effect. So the rubber band is like when something is super stretched, if you drop the rubber band, just like pulls back very quickly. So we need to involve ourselves in trades where the market is pulling back into resistance. Okay, and I am a confirmation type of trader. I like to see confirmation. I don't need to all the time, but that's how I'm comfortable with. And you need to find something that you are comfortable with. Okay, so what is my entire strategy, like in a nutshell? Like what are we doing on weekly basis when we are doing those PMAs? Okay, we identify key levels of support and resistance on monthly and weekly. We have the yearly for the bigger picture only. Okay, so when price hits a level of support, for this example, on a monthly chart, if it's only a monthly level, we wait for a confirmation on a daily chart that looks like this. Could be looking like this. A swing break rotation, a set and forget, or maybe price hitting this level on a monthly chart gives you a monthly ACAT. Maybe price will be giving you a weekly ACAT, whatever comes first. Maybe the weekly chart will be giving you a weekly move. Explain on the content on the website. Okay, so when the market is clearly trending, when the market is clearly trending on your monthly or weekly or both, and price is correcting itself on a monthly weekly chart back into, in this case, resistance. Okay, if you have a natural stop on your daily or 4-hour chart that is deep enough to use as a natural stop, and it makes sense to you after you understand how we are marking these natural stops, you don't need to wait for a confirmation at this level. You can just enter that trade as a pending order. Okay, as long as you have a natural stop on your daily or 4-hour. Okay, if it's a weekly level, 4-hour. If it's a monthly level, a daily. You can always make exceptions to everything that I'm saying. That means you are watching a 4-hour a natural stop on a monthly level. It needs to be legit. So don't force it. It needs to stand out to you like a shining star. Okay? When you are trading against the trend, sorry, before I go against the trend, option number one, when price is trending and you have identified this on a monthly, weekly, then you just enter that trade as a pending order if you have a natural stop that you're okay with. Second option is you wait for structure damage, or one of my patterns. When you are trading against the trend, we always wait for confirmation. Always. Okay? We don't just enter a trade when we are going against the trade, because then price needs to prove us right. This has all to do with fractals. The market is, moving in fractals. You have to understand. If you don't understand the monthly chart, where the monthly chart is heading, doing, in which phase, are we in a correction, in a continuation mode, or are we in a correction mode? Continuation, correction, continuation, correction. Same on a weekly. Okay, now I know everything I need to know about the monthly chart. What is the weekly chart doing? And then you scale yourself down into your entry time frame, and now you are waiting for that pattern. Okay, if you are waiting for a swing break rotation, that's all you do. Then you wait for a swing break rotation at that level. But you also know, are we in a correction mode or are we in a continuation mode? This is usually where we are trading in alignment with the trend, and this is usually when we are trading against the underlying trend. Okay, so 9 times out of 10 these trades are hands off, and the correction mode is hands on. Okay, and there are times when we are hands off, but we are taking trades where price is heavily overextended. We are using hands on anyway to be on the safer side. Okay, hope that makes sense. I don't want to make this too long. I'm usually, we are talking about this in the PMAs, and then I will refer to this video and tell you, hey, did you watch that video? Because now the monthly chart is correcting. We have a weekly change of sentiment. It went from up to down, but my overall bias is up, even though the monthly gave us a rotation. But what the weekly chart will be doing, by the time the monthly chart hits this level, the weekly goes back to normal, just in alignment with the underlying trend with the monthly. Okay, same for the daily, etc., etc. So what I want you to do is that actually try to find examples on your monthly chart where the monthly chart is retracing and the weekly is changing from up to down, gave you the impression that we are going down, and then the weekly chart goes up in alignment with the monthly chart. And if you are a day trader, you just do exchange the monthly with the weekly. If you are a scalper, exchange the weekly to daily. And then you look for those waves on the 4 hour when it's changing, and then it goes in alignment with the underlying trend on a daily. Combining different time frames is the only difference when you are trading. The knowledge, the things that we are using is identical, and the market is identical. Whatever happens on a monthly chart happens on a hourly chart. What I mean by that is price is moving in waves, retracing, correcting, continuing. Okay, and therefore it doesn't matter which trading style I have, unless you're here only for the for the pending orders, which is wrong service for you. Is that whatever I teach you, whatever I do on on these PMAs, copy that and trade whatever trading style you have. Worst thing you can do is doing everything. Okay, therefore, because this is a complex market, we are scanning through 28 pairs. The overwhelming factor makes you stressed, and when you are stressed, you are taking bad decisions, which will affect your learning curve. Learn how to do things properly. Once you do that, then if you want to do both long-term trading, short-term trading, because you have capacity for it, do it. Or just stick to one thing. Whatever, you have the answer. If you get overwhelmed, do less. If you are bored, and you have the capacity of doing more, do more. We are all individuals. Some people only like to do one thing. Some people have the capacity doing several things and do it properly. I'm not one of them, so I like to do just one thing, and that's what I'm doing. Okay, I either day trade or long-term trade. There are times when I'm short-term trading where what is my only number one rule? Well, I'm only allowed to short-term trade when I can day trade myself into a swing trade or day trade myself into a position trade. Thank you so much for listening. Feel free to leave some feedback. Hope this was useful for you, and I'm looking forward to show you some live examples in the PMAs.
So I hope you were able to see the incredible value in analyzing charts the way that Darko showed. It really is a powerful way to truly set the odds in your favor. And the proof of this, of course, is that Darko's been using this approach profitably every single year since he became our lead coach back in November 2017. So almost 6 years now. So thanks for watching. Please don't forget to hit that like button and subscribe to our channel as well. And that'll do it for now. So have a great weekend, everyone. Take care.